Hi, this is Chris Conroy, EVP of National Accounts with Insurance Agency Marketing Services, or IAMS. I'm pleased to be hosting today's second webinar program in our four-part series, 2020 Wayfinding series, in partnership with Fidelity and Guarantee Life Insurance Company, which we know you'll find to be a highly engaging conversation with industry leaders and recognized experts in which we're certain you'll find great insights, tangible takeaways that you can incorporate into your practice. Bear with me 1 minute here. Apologize for that disruption there. We had several hundred fellow advisors who registered for our first program a couple weeks ago and received great feedback from that kickoff conversation with F&G's president and CEO, Chris Blunt, who discussed why F&G. He offered an insight into where F&G's headed, its competitive appetite, its strength and stability through its acquisition. Check here with your IAMS marketer after today's program if you'd like to receive a link to watch that first program. Many of you know on this webinar today know us, but those who have not partnered with us know that IAMS has a deep-rooted commitment through its 34 years in business to delivering on one simple promise to our customers: to help you win by providing the tools and advice so you can thrive. We're committed to winning your trust through industry excellence and leadership. This Wayfinding 2020 series with F&G Life will deliver on that promise, the promise that will help make you a better financial professional in your relationships with your clients. F&G Life has been a long-standing core carrier with IAMS and many of our advisors all around the country. They've had an incredible history of success, and 2020 is shaping up to be another unprecedented year for them and their outstanding products, service, and strategic direction. We're excited to partner with F&G in creating this exclusive Wayfinding series, which will feature top leaders, including Tom Hegna, Bill Cates, and as I mentioned, we were pleased to have hosted F&G's president, Chris Blunt, alongside SVP of Distribution, Ron Barrett. Today, we have the privilege of hearing from another top thought leader, Mr. Shawn Golhar of Barclays, and F&G's National Account VP, Luke Christensen, whom I will introduce shortly. This Wayfinding series with F&G will not disappoint you. I also want you to know that one core differentiator about IAMS is, and how we're different than any other IMO that you might do business with, is that we're here to build your business and reach your fullest potential through a collaborative, comprehensive, and customized approach to your business. Whether it's our individualized market analysis program, our proactive industry-leading case support, many of the incentive programs that we offer, know that each is uniquely tailored to your needs. Independent advisors are our customers. You are our customers. Today's format will be relatively straightforward. I'll cover some of the information about IAMS. Luke will go into the Barclays Trailblazer 5 Sectors 5 Index, and then I'll read through and have a conversation with Shawn. I'll be offering to everyone on this program a few polling questions to help make this interactive so we can follow up with you on requests that you might have. Be on the lookout for these polling questions throughout the program. Please answer, and then we'll get back to you right after the program. If you should have a specific question, you can ask in the chat box, and then we'll get back to you right away. Again, thank you for joining us today. And now let's move into a little bit of conversation about IAMS before we get going today. So I want to cover just our new producers builders program, and this is for new producers in the first 6 months of production. This is great opportunities as you partner with us to get a jump start with some great incentives, whether just a simple $100,000 case, you receive things such as an iPad or 1,500 piece postcard mailing. And then for those producers that are going to do more business with us on the other end, say $1 million level, there's a lot of great opportunities with preset appointments and dinner workshop pieces and other brand builders that we offer. So check with your IAMS marketer about that, how those programs work. The second piece I want to touch on at IAMS here is our back office support, which is really a strength of IAMS in our 34-year history. And the key takeaway here, I think, is, from submission all the way through to commission, we're there to support you with building those cases and providing customized case design support, making sure your business goes through smoothly and seamlessly. And then last, I want to touch on our creative marketing solutions. And this is an area that we've really shined this year, particularly amidst the COVID-19 pandemic. where we can provide some tools that many advisors are finding great value to reach clients, prospective clients on a virtual basis. So we offer best-in-class digital solutions, but also some of the more traditional turnkey solutions that you find in the marketplace. So please reach out to your IAMS marketer here, and we'd be happy to get you more information about our creative marketing solutions and how we can help you. One thing I might launch a polling question right now real quick, and is we're pleased to offer a free marketing analysis program, and we'll go through all of your assets, digital assets and otherwise, making sure they're aligned. So if you'd like a free market analysis of your business that we can provide to you, we'd be happy to do that. Go ahead and answer that polling question if you are interested in that. We'd be happy to get back to you. So with that, let's move on to the rest of the program, and I'll cover a few slides now with before we get into our White House update. And in our second installment today of the 2020 Wayfinding series, we titled it White House Update, and we'll certainly be covering the latest news and predictions on the race for the White House, which is just 26 days away from now. Which, who knows? We'll ask Shawn a little bit. Maybe it's 126 days until we really know what the outcome of who's going to be the president. But we'll be covering a lot more than that today, and touch on a lot of important public policy decisions, regulatory changes, and really what we can expect on the fiscal monetary policy front that's going to face the country. So be on the lookout for that conversation. And as I mentioned, we're pleased to have Luke Christensen, both who's National Account VP with F&G, and Shawn Golhar. And I want to do a quick introduction here of Luke before we get into the program with Shawn, which is, Luke joined F&G in 2014. He served as a variety of sales roles for the company, now as VP of National Accounts, where he's supported distribution partners and their advisors all over the country. Luke has a diverse background, having worked at a leading IMO and another annuity carrier prior to his tenure at F&G. He's a dynamic sales leader, having partnered with and trained hundreds of marketers and advisors all over the country, now remotely amidst the pandemic, but he's been involved with a lot of other community-based causes as well, including Meals for the Heartland. He's also, as we heard from Ron and Chris Blunt, very, very passionate about the annuity business and sees a great future. So with that, Luke, welcome to the program.
Chris, appreciate the warm introduction there. I know everybody didn't sign up for this webinar to hear from me today, so I'll be humble and be brief so you can hear from Shawn here shortly. But I know you heard from our CEO and president, Chris Blunt, in the last part of this webinar series on our success and how we've been so successful this year. And I just want to give you one of the main reasons that we've achieved that success. In addition to working with fantastic groups like IAMS, we've got a wonderful strategic partnership in place with Barclays that's been going on almost 5 years now. And I just want to talk briefly about that in our top strategy that we use on our annuity products and our life products as well, the Barclays Trailblazer Sectors 5 Index. If I were to give you 3 or 4 bullet points, here's what they are. Number one, this is by far our most popular strategy at F&G, and hopefully here in a couple of minutes you're going to see why. You've got some very competitive participation in this index. We offer up to 160% par rate. And what most of my top advisors absolutely love about this strategy is on a worst case scenario, the minimum contractual guaranteed participation rate is 100%. So you can have that peace of mind knowing come renewal rate time, we're never going to drop that par rate beneath 100%. That's really nice safety net. Again, I think that's one of the top 3 things that the people who are using this strategy love about it. And next, it is an award-winning strategy, which moves on to the next slide here. We actually, in 2018, won an award. Structured Retail Products of Americas gave us a Deal of the Year. So Barclays and F&G beat out some significant names there. So a little bit about the index. Harry Markowitz, the professor, you may have heard that name before. He's the father of modern portfolio theory. Back in 1952, he crafted this. anybody managing money today, if you've got a Series 6 or 7 or 65 license, you're probably familiar with modern portfolio theory or efficient frontiers. He actually won a Nobel Prize for this work. And essentially, it's about diversification. It's about achieving maximum returns while minimizing your risk. So the composition of this index, it's comprised of the 11 sectors of the S&P 500. There's 3 fixed income instruments, and there's a cash component. And on a daily basis, Barclays can rebalance that based on a 5% risk. So it is an algorithm. This was a top performing strategy in 2019. We saw a lot of people come aboard to F&G as a result of the performance of this index. And I did prepare a slide that shows you a little bit about that performance. So I've got an illustration here just showing simple round numbers, $100,000. And if someone were to put money into this index over the last 10 calendar years, that $100,000 grew to $247,000. So it's definitely a pretty generous illustration. Now, we also get consistent live updates on the performance of this index. So moving on to the next slide, you'll see what that most recent performance is. This year's been a little shaky, but over the last 2 years, it's performed 9.2%. So had you been in a 160% strategy, you of course take that 9.2, multiply it by 1.6, and here's your return over the last 2 years. So it's one thing to tell you all about this performance and tell you about how great this strategy is. I think it's another thing to show you. So moving on here, I did prepare a sample statement for you. This is an actual client who had been in this index over a 2-year period. And you'll see the index percentage was 10.72%. Over those 2 years, it had a 100% participation rate. And maybe more importantly, the renewal rate, it renewed at 100%. So again, I think it's one thing for me to tell you all this. It's another level to actually see what it's done. So we're very happy with the performance. We're really pleased with the partnership. Barclays obviously has a ton of history and is one of the leading investment banks. So we definitely trust their expertise. They've got a great resource as well. If you want to see a consumer video, if you want to track the performance, if you want to pull up the details of this strategy, you can go to trailblazer.barclays.com. And if you have any questions about this index, I'm more than happy to answer them in addition to IAMS. So myself and my internal sales partner, Matthew Mundell, are your dedicated sales team to support you and to help you with your F&G business. So again, Chris, thanks for the time, and I'm going to pass it right back to you.
Super. Thank you very much, Luke. I just launched a polling question there. If folks would like more information on that Trailblazers index, we're happy to get that to you. So go ahead and answer yes if you're interested in getting more info on that. We'll send you the brochure. We'll send you additional collateral and make sure IAMS marketer reaches out to you and gets you that info. So I'll go ahead and close that poll. Well, let's move on. I'll do a quick introduction of Shawn. And Shawn, I'm going to unmute you and make you available to chat here. But thank you,
Great.
Shawn. I'm pleased to introduce you today. Shawn Golhar is with Barclays. He's 20 years experience as a consultant after graduating from Harvard with a master's in public policy. He's a fellow with the Truman National Security Project and on the board of advisors with the Millennial Action Project and co-founder of America Needs You, a mentorship and education program targeting low income to earn a degree in a job, where he's won the Barclays Citizenship Award in 2015. At Barclays, he served roles in public finance, investment banking, public policy group, and the last 5 years as managing director and head of public policy research. He's been featured on a wide variety of national political shows, including most recently the Balance of Power show on Bloomberg Politics, offering insights on political developments and business impacts. He's a regular contributor for Barclays Research Notes, including one reported just this last week that I read over the weekend. So welcome, Shawn.
Thank you very much. Excited to be here.
Thank you. And I know you have a hard stop with other commitments here in a little bit. So I wanted to kind of work through a number of broad topics and ask you a series of questions. And thank you for your time and insight today. Well, the first of which is, predictions on the presidential and also the U.S. Senate elections. So, in light of, it seems like every day is there's some new development that no one can really predict.
Yeah.
We had the VP debates last night, and I know you wrote in a Barclays note that I read Sunday that the market seemed to have priced in almost a Biden win, with a chance of that prolonged contested post-election battle maybe lessening. So what events, give us a little color around where you see things
sure.
headed. And also, is there anything between now and the next 26 days that could substantially change that, at least how the market is pricing in the outcome of the presidential election?
Yeah, well, great. Well, thank you for having me. And to be clear, I sit on the research side of the investment bank as a former investment banker. I'm not a lobbyist or advocate for positions on behalf of the firm. I'm very happy to do this. So real quickly then, however you want to cut the data, polling data right now, Biden has a substantial lead, 9.7 points on the national polls across all the key battleground states. Florida, he's up by 4.5. Pennsylvania 7.1, Michigan 6.2, Wisconsin 5.5, even Republican-leaning states, North Carolina, Biden's up by 1.5, Arizona by 3. You want to go to Texas, the state that Trump won by 9 points in 16, it's now within 3 percentage points. I don't think Texas is really in play, but it is interesting. And if I were the Biden campaign, I would heavily spend in Texas to the degree I can to put the other side in a bit of a defensive position, because it is not completely out of the realm of possibility you could get enough votes in a place like Texas and make that work. So however you want to look at it from a popular vote standpoint, from an electoral college standpoint, Biden's well positioned with multiple paths to get there. I think for the market, it's been a little hectic on that. I think the idea of a popular vote electoral college split again was not was something that a lot of people were expecting, or at least thinking it's possible. And that's why you saw betting markets closer to 50-50 early on in the race. But I mean, Biden's been up at minimum 4 points nationally. Now, look at Hillary Clinton in 16. What was that race looking like? Well, Hillary was up by a substantial amount, but there was a moment in time where Trump was leading by 1 percentage point. In the national polls over Hillary. People don't remember that as much. She bounced back right after that and was generally around 3 to 4. If you look at the national vote at the end, and you look at the last poll before the election, the last poll was about a 3 percentage point Clinton lead. She won the popular vote by 2. So you could argue there was this error rate of about a 1%. I know we can define error statistically in a very different way, and I'm happy to give a longer talk on polling errors, but I think it's nice to make it a little bit easier to think through it and just be in a clear, concise manner. If there's that 1 percentage point error in a national poll and Biden's up by almost 10 right now, that is an enormous cushion Biden has. Now, if you go to the states, it's a different story. Places like Wisconsin had almost a 7 percentage point error in 16. Michigan, Pennsylvania, also 3 to 4. Biden is ahead in some of those states by more than enough to have a cushion over that error, if you want to think about the 16 error. But not by a substantial amount. And if you did the errors from 16 onwards to today, and they had that large enough error, Biden would still win the Electoral College. If the vote goes and the Electoral College goes the way of current polling, you're looking at a Biden win slightly better than what Obama got in 2008. You can see Biden getting in the 370s in terms of electoral votes, while Trump would be down in the 160s. I think for the markets, the thing I think you're talking about over the weekend was when the president got infected. There's been a clear dip in his polling from getting infected and from the debate, probably more from the debate. My view on this is, he's got to find a way to stem the tide. You've seen a national mood change state by state, and is even though the economy has been coming back, there's still a lot of weakness. I mean, look at the jobs number. From 2008, from that recession, right at the end of George W. Bush, it was essentially a straight line up. And the slope of that line was almost exact throughout all of Obama and throughout all of Donald Trump's first term. Honestly, there isn't much of a Trump bounce in terms of the jobs market. I know people like to say otherwise, but look at the data from the Fed. Then coronavirus hit. It's an unbelievable sharp downward turn. We've come up maybe a third to a half of the way back, but we're nowhere near where we used to be. And I think net on his first administration, he's still down about 1 million jobs. So right now, I would argue in terms of what you can do to change the course, and what the markets want to see, they want to see stimulus. I am actually surprised the president is not more supportive of stimulus. I think he thinks he can make it more of an election issue, like vote for me and you'll get stimulus. The reality is, Congress was probably going to do the stimulus package back in August. They were negotiating it. While they're obviously political rivals, Pelosi and McConnell, I actually think they can work well together when needed, and they've passed an incredible amount of stimulus money before. And people might argue, well, why is the federal government doing this? It could have been a lot worse. If you wanted to see like what a beginning of a depression would look like, if you didn't pass any stimulus dollars, you would have had even larger layoffs at state and local. Small businesses would have been decimated, even more than they are today if you didn't do any stimulus package. So pulling out of this current stimulus pre the election, I think is actually a bit of a policy mistake. The markets expect to see it and want to see it. Businesses certainly need it. If you see economic weakness now coming into play right before election, that just hurts the president's chances. So I don't think that was a smart strategy to use to move forward. One thing then on terms of the Senate, which I'm going to mention in a second, but more importantly, I want to go to a discussion on mail-in ballots. On the Senate right now, Democrats have an advantage in that they're just polling well in lots of these key states. You do see a handful of states that are in play. I would argue, right now, if you look at the polling data just straight down the line and call a state either one way or the other, it looks like Democrats will have a 51-seat majority. It could increase slightly. You could see a 52. I would be surprised if they could win, get up to 53 seats. That would be a dramatic change. Just so everybody knows, they currently have 47, and they're widely expected to lose the Alabama race, which would take them down to 46. So to get up to 53 would be an enormous movement where they basically clean up a lot of the other seats. The probabilities right now, if you want to think about a Democratic sweep, so what are the chances you see Biden in a Democratic Senate right now? The folks that calculate this would show, essentially about a 60% chance that's the case. I think that's about right. I think the chance of a Biden victory, it might be slightly higher right now. Then certainly on the Senate side, but many people do think there's not going to be a lot of split ballot voting. In other words, it's straight down the line. You're either going to vote for D's or you're going to vote for R's. And then one last point before I turn it back to you is on mail-in risk. So how do I think about the mail-in vote? Well, a couple facts. One is historically, there's never been any evidence of widespread election fraud with mail-in votes. There's just no evidence. And in the current court cases, there's about 40 states where there's cases. When confronted with and asked for evidence by the courts, the Trump campaign has been unable to produce those. I just read the Montana case, I think it was a couple days ago, showcasing that. And the judges have ruled in favor. Now, there are higher ballot rejection rates with mail-in. People don't always sign, they incorrectly sign, but that doesn't mean it's fraud. Imagine how you sign your passport and how you sign a credit card receipt at a bar. Sometimes those don't match. There are also issues with not properly sending your ballots in or being delayed and being late. For instance, Pennsylvania has kind of a strange ballot in that you have to put your ballot inside of 2 envelopes, not 1. And if they're not done correctly, it's invalidated.
Interesting.
So the way I think about the bail-in risk, and I think what all of your clients and colleagues here on the phone should think about are what are the possibilities we don't have a definite winner on election night. I think the chances are actually quite high because there's so many mail-in votes coming in, and it's going to take time to count those votes. 4 states, Michigan, North Carolina, Pennsylvania, Wisconsin, had recent court cases that are allowing those states to count votes after the election. Some people would say that's not fair. Why can Pennsylvania count votes after? Well, if they're mailed in on time, and the post office, by the way, can deliver the mail. They deliver 472 million pieces of mail every day. That is 3 times the registered voters in the United States. So if everybody in the US dropped their ballots in the mail in one day, that would be 1/3 of the normal daily volume for the Postal Service. The Postal Service has complained about this before, a lack of funding. There needs to be a universal ballot. It's never, for political reasons, it's never taken off. So the way I think about it is you could see this idea that on election night, for people who show up to the polls, which by and large Republicans are more excited to do so, you could see Donald Trump leading in this red mirage. That then would lead to what we call as a blue shift towards Joe Biden as votes end up getting counted. Now, some states count before the election. So Florida counts 22 days before the election. They don't release those results, but they do process and count those ballots. It is possible on election night, Florida will give us an actual determined answer as to who won the state by 11 p.m. Eastern or even midnight. If Joe Biden wins Florida, it might all be over. there might be no mathematical path and electoral path for Donald Trump without Florida. There's no surprise to me when Mike Bloomberg said he's going to drop $100 million in advertising to support Biden in just Florida. There was a reason for that strategy. The way also to think about mail-in ballots is because of this issue with ballots being counted, they can also be contested. Now, in the court of public opinion, I can go on Twitter and say almost anything. And both candidates are not, I don't expect either of them to concede right after the election. And we could be in a situation where a week later, we still don't have a result. If nobody gets 270 votes, this may come down to like a Michigan, which is 14 days after the election, they're going to still be counting, or Ohio, where there's 10 days after the election. And Ohio is interesting because since the 70s, it's picked every presidential winner. I think at the end of the day, probably we will get a result and a determined result. The way it's finalized, though, is if you disagree, you go to the courts. And in the courts, what you have are a handful of key dates. And I'm just going to say these key dates, and then I'm going to pause for questions and for anything else that we want to discuss. So in terms of key dates, the way to think about it is in each state, governors have to resolve or are asked to resolve disputes by December 8. That's called the safe harbor deadline. So if you've got a contest and you're debating about whether or not certain ballots should count, or the signatures are off, or those are illegal ballots, whatever you want to say, or there's voter suppression or intimidation, you should probably try to resolve those by the safe harbor, the 8th of December. On the 8th of December, most governors will sign a document. That's the first of 2 documents certifying the election. From a historical basis, when those things get signed, the election is finalized in that state. Now, if someone has 270 votes, let's say Joe Biden wins Arizona and North Carolina, the map is very different. Maybe you don't care what happens in Pennsylvania or Ohio or Florida, and we don't need to worry about those votes as much. If someone gets 270, it's over at that point. If not, let's move on. The next meeting will be the electors meeting on the 14th of December. Remember how, when you actually vote, you're voting your preference, and those preferences are added up, and then the electors actually cast the ballot? Well, that happens on the 14th of December in each state. Is it possible electors will disagree with the governor or disagree with the courts or have a disputed ruling in a state? I guess it is possible. I don't think the courts have really been tested on this issue. In the late 1880s, there was a disputed electoral contest where there was differing results, and then a bipartisan commission was set up to resolve that. I think it's possible this time. I don't discount it, but again, the stars have to align. It's got to be so close. Nobody's got 270 votes, or there's so many contested ballots in different states. And then in those states, there's enough contested ballots to make a difference. Florida 2000 is a good example. The margin of victory was 537 votes because the Supreme Court stopped the recount right before that electors meeting. In 2016, Trump won Michigan by a mere 11,000 votes. So you could imagine this being the case, but it has to be that all the stars align and the votes are so close that we're there. But be that as it may, on the 14th of December, these electors meet and they sign documents. If they sign documents indicating one of the 2 candidates won, and it agrees with the governor's documents, they're all mailed into Congress by the 23rd of December. If someone's got 270, again, it's over. But one last date, which I think could have a little bit of drama, will be January 6th. That's when Congress ratifies the vote. Now, people have asked, what happens if a candidate, is not able to run? They die or something happens. There's a lot of confusion if it happens in between the election and this congressional ratification. I'm happy to talk about it, but I don't want to get bogged down in some of the details.
Yeah. That's you addressed a lot of the questions I had. I know you touched on a topic is just the contesting. So quickly, Amy Coney Barrett, do you think she gets a vote by when? Is she confirmed? And then part 2 is if Biden wins and she is approved, do you expect him to pack the court?
First, she'll be the next justice. I have a hard time seeing that not happening. The votes are there. 2, does McConnell do the vote before the election or after the election? He doesn't have to make that decision now. You proceed according to normal course of action, and you hopefully get everything resolved. What does that mean? That means she's got to have a lot of meetings over Zoom with all the senators. 2 Republican senators in Judiciary are sick, are infected. A 3rd Republican senator is infected. Now, Judiciary doesn't have to meet in person. They can do by proxy voting. So you could get the votes in there, but the regular Senate floor has to vote in person. If more Republican senators are sick and unable to, or unwilling, for whatever reason, to attend, it's possible there's no quorum and you can't actually do the Senate vote. Now, after the election, you can do it. If the Democrats win, the Senate and Biden wins, and McConnell does this in that lame duck, Democrats are going to be livid. They're going to be so angry. I don't think they've made a decision on quote unquote packing the courts. And by packing the courts, I think what you mean is expand the size of the Supreme Court from 9 justices. I don't. If I were Biden, I wouldn't have a decision. I'd have pros and cons to doing so, but I wouldn't make that decision, and I wouldn't make that threat right now. If Biden were to win and the Senate were to go to Democratic, and McConnell still did the vote in the lame duck, which there is no historical precedent. If Amy Coney Barrett gets confirmed, this will be the without precedent. This has never happened this close to an election or after an election. Oftentimes, even Lincoln, I was mentioning, there's a lot of other cases of this. Presidents have waited because of an election. That would be an opportunity, I think, where Biden might make that threat, but only he would do that after being president-elect. So I don't think a decision has been made on that issue.
Gotcha. Thank you. Well, let's talk a little bit about policy. Under a Trump, Part 2 administration or under a Biden administration, international trade policy, where do you see that heading? And then what impact will that have to the U.S. equity and bond markets?
So on trade policy, you said?
Yes, international trade.
Well, with a Biden presidency, trade risk goes down. I'm not going to be writing notes on U.S.-European trade and the existence of a bilateral trade deficit as a national security risk. Like BMWs are actually made in South Carolina, not really Bavaria. So this has always been kind of a funny little subject to me. I think the trade with China will be slightly different, but in general, this delinking, this competition, this is the new normal between U.S. and China, no matter who wins. The question is, do we approach these things from a unilateral or a multilateral basis? Do you want to go back to U.S. and Europe working together through NATO? There is a trade deal being worked out between the U.S. and Europe that would help unite the two. That was in light of 5G and concerns there, pushing back on China. The Trump administration stopped that negotiation called TTIP. I think under a Biden that might come back into play. It'll be very tough for Biden to get trade deals passed. And it's so contentious. I mean, USMCA, truthfully, was building off the TPP, U.S.-Asia deal that Obama and even George W. Bush had negotiated largely. There were some new measures in it, but a lot of it was like, had been negotiated before, so it wasn't that controversial to put it forward. The key thing that the Trump administration did that we don't normally see is I felt like they really engaged labor and got labor on board to support it. So it was kind of an easy thing to get passed. But the reality is those measures and those items were very much negotiated well before. I would have a hard time seeing how Biden can do that again going forward, and it could be too contentious to get it done. I think, though, U.S.-China under a Trump administration, you're going to see additional sort of one-off measures. Now, these executive orders on WeChat and TikTok, they're confusing. And frankly, to be honest, they're confusing to national security lawyers. Someone jokingly said, like, it depends where the comma is in the executive order. And they're not well written, and they're not being circulated into the intra-government agency. So it's not like defense is signing off well ahead of time and they know what's happening. It's taken a lot of people a little bit of confusion. The tariff, notion of tariffs, though, they stay in place. I don't see why they would be removed under either administration. I think, U.S.-China tariffs, at the end of the day, China's got to do something big on this. So the big difference would be trade risk would not be as high of an issue under a Biden administration. You're not going to be waking up looking at your Twitter every morning as to what happened on trade and U.S.-China, but and you're going to see more of a multilateral push forward in terms of it. The big issue, by the way, in all of this is the vaccine. So, like, you haven't asked about this, but like really, a viable, safe vaccine that is not just announced, but actually available for distribution in Q2, Q3 next year is the big risk-on event. And if you all think that's going to happen no matter what, that might be the biggest economic mover out of all of these things.
Right. Yeah, I was going to touch on that. I want to jump ahead to fiscal and monetary policy. I know you have a limited amount of time today, Shawn, but Part 4 stimulus package, noise about is $1 trillion enough? When is this going to get done? How much do you think we need in order to avoid this kind of self-fulfilling weak recovery that Powell's made some noise about earlier this week?
Multiple trillions of dollars. I mean, look, state and local governments are laying off at an increasingly alarming rate. The federal government has a benefit of borrowing, and when they borrow and give money to states, it's often seen as a very effective fiscal tool. It's not about bailing out, fiscally irresponsible states. States are forced to balance their budget, and if you look at states, I live in New York. we pay a lot more in tax than what we're given in return. And if you want to take that ratio as a way of doing it and rethinking about it, you're talking about a very different fiscal union. So money wouldn't be wasted. I think everybody wants to see support on pandemic risk. Both sides want to see individual checks go out there for individuals to help support through this. You're going to see a lot more trouble on retail. I mean, our research team put together an interesting note on the future of malls, and they saw something like 10 to 15% of malls just will never be able to come back. So you're at a bit of an inflection point. So I think stimulus dollars could be very helpful. Now, you don't have to make it, the $1.5 trillion. The reality is, if they did a skinny at maybe 800 or slightly under $1 trillion, it would still be money well spent, and then they can come back to this later on, in the next one. So I think at the end, it's more politics than anything else, in my opinion. I mean, they would have got a deal done in August, I think, until the president put forward the payroll tax holiday. And that kind of switched the angle on this. And then I think sides got a bit confused, and you never saw a unified Republican approach on what they wanted to do. The skinny bill that the Republicans put forward in the Senate, honestly, was just for show to have a vote on that, but that wasn't really a strong negotiating position to move forward on. Hence the reason negotiations were being led by Mnuchin of the Treasury rather than being led by Senate Republicans.
Well, let's talk. That's a good segue here to the second question I have on the screen here, which is what does this mean for insurance carriers? So, most of the people on the call today are in the annuity and life insurance business, work with carriers that largely invest in highly rated corporate bonds, and they're in a challenging time right now where it's an extremely low interest rate environment. What do you see going forward, either fiscal, monetary policy that could affect insurance companies?
Well, I think you're going to see rates stay at the Fed near, at zero for quite some time. So as you think about reinvestment and things like that, the vaccine possibility means it's a risk-on event. And, at the end of the day, equities are where people are going to park their money going forward. We don't think the disputed election is enough to be a major change to our asset allocation. We still think, even with civil unrest that may happen from a dispute, a result will be determined. Now, someone may not accept it exactly, and you might see some drama, but markets should not be overly focused on that. And you may see some volatility, but not in the long term. I do think the notion of, and I mean, this is not a surprise, but clearly pandemics are going to be kind of an interesting thing going forward. And usually the US plans for the last risk or the last crisis, not for the next one. So you may see major changes in the federal government as they think about pandemic risk and preparedness, but it might be preparing for what is COVID-19, not for what COVID 2021 will look like, or COVID 22. And I think for insurance companies, modeling that is going to be, quite tricky, I would imagine, in terms of trying to think through the possibilities. I read a paper, for instance, that talked about, imagine if COVID-19 were actually spread by cats and dogs and not by human travel. Like, imagine if there was such an issue like that, and, the sort of ramifications. Note that the federal government does have, in defense and elsewhere, people that do look at future pandemic risks. These are people in areas that are not always the most well-funded. So I think from an insurance company standpoint, in terms of thinking about that risk side of it, it might be kind of tricky to properly model for that.
Good point. Good point. Well, one last question that's of interest to a lot of the people on the call, and if you have a thought, is regulatory change. So in our world, financial services reform is a big deal. It's certainly, we saw that change under the Obama administration. Parties involved with our company here and our trade associations were successful in challenging the so-called fiduciary rule that Obama had put forward. Do you see under a Biden administration regulatory changes on the financial services front, or are there just too many other clean energy or other policy things that are going to take trump over that?
This wasn't a financial crisis. This was a public health crisis. 2008-09 was a financial crisis. I don't think it's not a surprise Biden hasn't put out this big Wall Street plan. There's no need for it right now. That being said, while you might not see Dodd-Frank Part 2, personnel is policy. So he's going to appoint a Secretary of Treasury and think about the CFTC and the SEC, maybe even the Fed, with that light of what does he want to see in future regulators. So I think regulatory pressure will increase and it'll turn the knob a bit, but I don't think you're going to see some of the dramatic changes people worry about. Treasury Secretary will be the most important. There's a handful of names that are, kind of tossed around as possibilities. And I mean, I have my personal view on it. But that's something I think that's worth watching. Like if he went for someone who was seen as by the market as a possible Treasury Secretary that would take a more aggressive view towards regulation and breaking up institutions, then you may see a bit of a change on that. But I would be surprised by that.
Gotcha. Any thoughts on Labor Secretary, or is that a potential Elizabeth Warren, or maybe not?
No, I don't think Warren would be in the cabinet because you lose the Senate seat in Massachusetts and the Republican governor fills it. And if you're worried about every single Democratic Senate seat, why have that risk? Secondly, even if there was a special election in Massachusetts, Scott Brown won that once, a Republican. For those that remember, following Ted Kennedy's death, you don't want to put that at risk. I don't know about Labor. I mean, I've heard a few names. That's not one of the more, I guess I don't want to say coveted, but there's just not as much gossip, I think, around that name, around that position. It might depend on who ends up being in Treasury that they end up filling their way through. But I've heard, truthfully, a couple names being thrown around there, and I don't know if they have strong take on it. I do think watching Biden take on Warren's policies in certain areas, bankruptcy reform has been a big area where I think he's adopted a lot of our ideas. Now, a lot of those things depend on Congress, and I don't think Congress is going to have the bandwidth in 21 to deal with that. Maybe in their economic plan, and if Biden puts forward that Build Back Better, his economic vision, you might see some bankruptcy changes, but I would be surprised. It's not like Warren's ideas will completely flood through and all become law.
Good point. Good point. Well, let's, I know you need to run, Shawn. Appreciate your time. And just want to close here by saying thank you both, Luke and Shawn, for your time and insights on the Barclays Trailblazers Sectors 5 Index, and also, Shawn, your insight into the political landscape that we're facing today. And thank everybody for participating today in today's webinar and the generous sponsorship that F&G's had with the Wayfinding 2020 series. And be on the lookout for the next guest. We have Tom Hegna and Bill Cates. You won't want to miss those webinars. Top names in the industry and continue to deliver great value here. I'm certain that our attendees today picked up some insights and a better understanding of the Barclays Index, as well as a look into the political future and what it holds for us. I'm just committed to helping you grow your sales through a collaborative and customized model to reach your fullest potential. I'd encourage everyone here to call your marketer today at 800-255-5055. Ask for more information. A couple collateral pieces. One, the F&G Barclays Trailblazers 5 Sectors Index, and then also the IAMS Production Builders and Annuity Marketing Incentives and the free marketing analysis report that we can do for you. So be on the lookout for our third program in our Wayfinding 2020 series. The next one will be a conversation with Tom Hegna, financial planning expert, speaker, and author, and that'll be on October 29th at 10 a.m. Thank you, and again, appreciate Luke and Shawn, and give us a call here at IAMS, 800-255-5055. Thank you for your partnership.